Yo, what's up you guys? Welcome back to a new weekly market breakdown. And today's video we are going to take a look at the dollar index, the NASDAQ, the Dow Jones, as well as gold and Euro USD from a technical and a fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button there as well. Don't forget to check out the competition that I'm currently running on the Instagram. I'll pin a message in the comment section of this video there as well. Now, if you know this week for the GDP, not the GDP, but for the dollar index, in general, one thing you will notice is that the market had printed some very negative and positive news coming into last week, as we went into this week there as well. Today we had the prevalent GDP, which came through slightly lower than anticipated, but not enough to knee-jerk the dollar index, enough for the market to complete a potential correction after the dollar index had completed the last clearance. Basically, I call it clearance basically. Now that we so we have all of this news events that came through. We basically have the core PCE coming through tomorrow, but we can already gauge exactly what we can expect, especially if you look at the technical analysis in terms of where we are now. Article from CNBC reads here, it says that the stock rise Thursday as the S&P 500 tries to snap 4-day losing streak. It says here the stock rose Thursday with chip maker Nvidia leading tech giants, while trader assess future potential Federal Reserve moves. Now, if there's one thing that most of you have probably come across, right? If you've been here long enough, then if there's one thing that you probably have learned of everything that I've been saying for the longest time, right? You'll always see how the Federal Reserve gets involved in every decision making in the market. And when I say decision making, I'm talking about how they decide which way the market needs to go, because investors are always out there looking. It's like when you're employed, right, and you work for a company, and then there's a boss, and then people always look to the boss to understand what the next move is going to be when they suspect something could potentially happen. Same thing happens in the market, right? The market always looks at the Feds, especially with interest rates, and see, because the interest rate is the biggest driving factor that increases the value of a currency. That is why Japan looks like it does, and that is why South Africa is where they are today, despite the fact that they are hiking interest rates and as aggressively. The problem is due to load shedding, small businesses are getting affected. Employment, people are losing their jobs, so people are you can forecast this future, not the future. You can forecast the economy of this country straight to the ground. So without any further ado, so we now know that the NASDAQ got a boost from Nvidia, which didn't last long there as well. Now let's go to the technical analysis very quickly. Now we're going to start with the dollar index. Now back on the monthly time frame, what we have here was once again the market printed that equal low that I was speaking about. I can see here the market also broken above this strong level of resistance, came back, tested it. To most people it will be an equal low, and then if there's another low being created, then it also adds a triple low, but it's okay. Now the most important thing that we need to take care of over here is that we can see the market had printed very strong structure. This structure is important for the simple reason that the market came in here, hit resistance in 2016, and was only able to successfully break out of it in 2022. Now that is why it is not as easy for the market to go, we're gonna come back now. Now the dollar index for the long term is going to probably clear up all the way, all that liquidity to the upside. And the reason why I say so is because the current feeling in the market at the moment is, I don't want to say the current feeling in the moment, because then I start sounding like like Pips pay my bills, and so what I do want to say is that there's more room to the upside for the dollar index at the moment for the market to clear that liquidity over there. So we do expect the dollar index in the long term to continue, because we expect the Feds to obviously increase interest rates, as they said that they anticipate a lower interest rate by the end of the year, but they're also not less likely to go in less aggressive as they're supposed to. So if you've heard, if you've listened to any FOMC meeting, or whenever Powell comes out and he speaks, you always hear that the expectation is always for the Feds to continuously hike the interest rates for the rest of the year there as well. And for those reasons, I do expect the index to increase in value over the long term. If you go on the weekly time frame, what do we have over here now? What we have over here is we got a market that is currently breaking above a very strong structural level over here. This level over here acted as support. The market broke below, came back, tested as resistance, back to tested as resistance once again, and I do expect the dollar index to increase in value before we see a potential pullback and then a continuation to the upside on the daily time frame. What do we have now from a daily perspective? If you remember, when I did the breakdown, I think it was on Sunday, the market was sitting at this level. I explained all the reasons why we can expect the market to continue higher. Now that we are here again, I'm still going to say we're going to leave that as is. Now, if you've listened, if there's one thing that you can take away from what I'm about to say you now, is that price action always plays a very important role. But this was a impulse. After an impulse, you expect a correction. Now this correction has formed, then I do expect this continuation to the upside. So I do expect the dollar index to increase in value, to continue and hit this level over here, which should be located very close to the 0.382. Alternatively, what we could potentially see is we could see the dollar just give us a correction. But the way to do that is you take your Fibonacci from the low and to the high over there. Yeah, so we could potentially see the dollar index. Let me just do this. Pull back to the 0.382 and then continue higher. Now I have to use this thing because my accounts, my Facebook got so I used the Facebook to log into my initial account. So because my Instagram got reported, my Facebook got reported, so I couldn't log into my own Telegram account, not my own TradingView account. That's why all of these things that I used before is all out of place, as you guys might have noticed, because this is not the account that I've been using. I had to create a new account. So this is basically what I expect from the index going forward, and then continue that move to the upside. Next up, we've got the NASDAQ 100. Now the NASDAQ once again had also now broken below that strong structural level over there. If you start on the monthly time frame, the market obviously didn't want to go and hit that level of resistance over there and complete this W formation at the neckline. And we go on the weekly time frame. What do we have here? Now from a weekly perspective, we are quite bullish over here. We can see the market had broken above the strong level of resistance. Came back, tested it as support. But if you look closer, you'll see the market also broke below support, and it could potentially go back to test it as resistance here on the daily time frame. What do we have now from a daily perspective? For those SMC traders, could potentially speak about filling the imbalance over here, but well, that looks a bit different on the daily time frame. So what we have over here is we do have I just need to see what the color of this candle is over here. There we go. We've got a red candle over there. So we have this massive impulse, soft and impulse. Did you expect a correction? Now, if you take your Fibonacci from the high to the low over there, there is still a potential for the NASDAQ to basically correct itself further. So I do expect the NASDAQ to correct itself and then potentially move lower if need be. Alternatively, what we can see, the NASDAQ is also now trading below this level over here as well. So I guess the most important thing is if we do get a daily close above this level, then by all means then we can expect to go higher and then continue this move to the downside. That is the sentiment or the outlook for investors this year. Is a bearish stock market as well. Now here on the Dow Jones, the Dow Jones is also due for a correction. You can see here we obviously had the market that was stuck within this consolidation over here. Some will call it a bearish flag, some will call it a bullish flag, some will say it's a USA flag, some will say Bafana flag. You know, it's a flag, it's a flag, it's a ranging market, right? The market ranges normally when due to uncertainty. Okay, I know it's a flag. Some people are like, yeah, but Clint said it's a flag, and where's he now? Hey, any case, what we have over here is we got a market that broke below a strong level of support. Once support gets broken, that support obviously becomes a resistance there as well. So we do expect a slight pullback in the market before a continuation to the downside there as well. Next up, we've got EURUSD. EURUSD, as you can see, also have some clearance to the downside over here. The market just broke below the strong level of support. And once support gets broken, it then becomes resistance. Now the best way to approach this is very simple, right? The first thing that you need to do is you need to find this tool over here. Sorry about that. I'm just lost if I don't have my own, like, because I have to adapt to this one over here now. So the best way to approach this, I should just be adding all of these things to my, because I'm very like my mind is just all over the place. So the best way to approach is obviously just wait for that correction and then that continuation for the market to go and complete this wave 5 to the downside. Next up, we've got gold. Now gold has been very stubborn, as we know it. Now gold had broken above the strong level of resistance back to test it as support. Gold also broke below support and it was back to test it as resistance. It's basically looks like a consolidation going here on lower time frames over here. This is just one candle, so obviously you guys know what the best way is to approach this. If you go on to a 2-hour time frame as well, you can see over here, right, any person that knows how to trade. And when I say any person that knows how to trade, I'm not saying these, like, I'm not speaking to these people, right? These guys, I'm not speaking to you, like, I'm not speaking to you guys, right? I'm speaking to, like, not those. I'm speaking to the people who knows that support gets broken, it becomes resistance. Support gets broken, it becomes resistance. Resistance gets broken, it becomes, like, I'm speaking to those people who are keeping their charts very clean. Okay, if you know that you are, you know, like here and then there, like, if you know, okay, I'm sure you know what you need to do, but not to confuse anybody out there. We obviously know that based off simple price action, all we need to do is wait for clear break below support, and then once the market come back to test it as resistance, we're going to get in, and that is the way we're going to approach gold there as well. That is all from my side, guys. I want to say thank you so much for your time, and as always, cheers for years.